All right, ladies and gentlemen, sorry for the delayed launch. We did have some technical issues that we were resolving in the background, but we are here to talk taxes, which is the most exciting thing we're going to do this week. Taxes are a large part of crypto. When you're buying and you're selling, that you have to eventually pay the tax man, and everyone has tax questions. I wanted to bring some professionals in to answer those questions, as well as go through what are the most important things that you should be paying attention to while doing your crypto taxes. So that's where I bring Nick in. Nick, why don't you go ahead and introduce who you are, who you represent, and maybe a little bit about your company and all that jazz.
Awesome, Sensei. Well, thank you for having me. Thank you for having me again, first of all. We're right in the thick of it. We talked like right before the October deadline last year. You were kind enough to have me on the show, and now you invite me back right. We're about to start again for this year's tax season. So I'm Nick Bjorn Slettengren. I'm the CEO over here at Count on Sheep. We are a leading crypto tax service company where we help you prepare your crypto tax forms, where you can hand them off to your CPA or upload them to your TurboTax. A lot of people don't know that that's a step that you need to take before filing, because you can save a lot of money there. You also have a potential to get, you want to get the accurate numbers in and not really leave that up to chance. So that's what we're here for, and that's what we're here to talk about today.
Beautiful. And, one of a few things that we're going to touch on, of course, are the 1099 DA forms, which are supposed to be coming hot and heavy from all the crypto exchanges, and why that's important. Obviously, there's going to be a ton of changes and things that people maybe do not know. And so we're going to go over that and a bunch of other things. So do you want me to bring in Garrett now, or do you want to just try to hit some of these yourself?
Well, let's go for it for a second, then let's open up with Garrett. I want to do a good introduction to him. He's one of our big hitters on our team, our head of tax, CPA. So we're always glad to have Garrett here and answering all the the CPA questions themselves. But yeah, let's jump into that 8949 and we'll start to dig on that.
All right, so here, what I want to start is, like, when you look at real XRP that people are buying, not the ETFs, but actually buying XRP off the open market. How many people are kind of like quietly overpaying their taxes without the IRS realizing? Kind of, like maybe people are not quite filing things correctly. Are people overpaying? Are people underpaying? Like, how do we fix that?
Absolutely. So, I mean, the long story short is people have been overpaying in their XRP for quite some time. And this, it goes for other cryptocurrencies you buy on exchange. If you move it off exchange in any kind of move, you're typically losing money to the IRS. A good example of that is if you move your XRP to a cold storage and you take custody of it, like you should, you are moving it off exchange. And when the exchange loses sight of it, it really kind of stops accounting for the cost basis. So what that means is, as it leaves and goes to your cold storage, it basically, will say that you sold it versus, you transferred it to another wallet that you own. So when you transfer from a wallet to a wallet that you own, that's a non-taxable event. When but that's not the way they see it, because they do not know where your cold storage is. They do not know that it's yours. So to be safe, they are reporting that on your 1099 as a sale. So you're getting taxed just for, doing what you're supposed to be doing in securing your crypto. So that's just one example, but it gets worse this season. Yeah, it gets worse this season. I'm sorry, and all the people out there, one of the biggest myths, we'll just blow out of the room real quick. I know Sensei and I have talked about this, but it's like, oh, they can't see mine, or this is, my XRP is, it's anonymous. No one knows, that kind of thing. It's a blockchain. It's a public blockchain, and it's a great public blockchain that you can actually get into. You can use an Explorer. You can look at the blockchain. You can see the transactions on it in XRP. So it couldn't be anything further from the truth. So while you might think you're anonymous, you're really not. And even while your address makes it seem like you're anonymous, you did come in on an exchange to buy your XRP. Typically, most of those are KYC. So they know you are. You had to show your photo on Coinbase or wherever you bought it. So people know who you are. And now we're kind of getting down to the nitty gritty this year. The let's talk about the 1099 DA. So the 1099 DA for digital assets means that for the first time ever for 2025 tax season, which is happening right now, we're about to pay our taxes on it April 15th. That form is for digital assets specifically. That means that the government and the IRS is putting your crypto under the microscope with the 1099 DA. So they want to see it siloed across from your other assets, and they want to see it, put into the 1099 DA. So, what do you think that means? I mean, I think that means that they're taking a hard look at it. I think that means that they're getting ready to, tax people pretty hard on their crypto. And there's no more saying, people don't tax crypto and this kind of thing. The government is very much looking at it, and it starts this year.
All right, before we kind of expand on this, I want to ask the audience if you can and if you're on Twitter, please reshare out the space. Obviously, taxes are something that we all have to deal with no matter where you are. And we'd really appreciate getting this in front of more people so they can understand maybe how to take advantage of a few of these things that we're going to go over today. So thank you for doing that. All right, so let's talk about what's the biggest, oh man, I had no idea moment that your clients have when they finally see this 1099 DA and their XRP trades actually show up on their tax return. Like, or do you have any kind of examples of this happening with somebody, that you guys are working with? They're like, oh man, I had no idea this, or look, a story that to go with that.
Right. So a client came to us the other day, and we kind of saw this coming, but they're going to leave the cost basis blank on the form. So they're going to report the proceeds. So if you took any proceeds, or you took any, gains last year, from a sale of some XRP, took a little off the table, anything over $600, you're going to get a 1099 DA. And what they're going to do is they're going to show you, basically what you sold for. So your total proceeds, but they're not going to show you the cost basis, what you acquired the XRP for. So if they leave that blank and they don't fill that in, then you are going to be paying on the total proceeds, where you should be able to deduct your cost basis. So to really put that into kind of a better light, your cost basis is what you acquired for. So that's what you bought it on Coinbase, for instance. You bought your XRP, you're lucky to get in at, sub $1. And then when you sold it at, at $2.50, you're going to show your total proceeds rather than the what you acquired for. So you're able to deduct your cost basis from your proceeds. That shows your gain. That's what you're taxed on. But in this form, it looks like you're going to pay on your gains and your cost basis, at the total amount. So basically, long story short, people that are following, it's a $0 cost basis. If you leave that blank, you get $0 cost basis. That's like and you're paying on the full amount. So you're going to say, why did all my gains just get wiped out? Why am I sending all this money to the IRS? Why is crypto, you're going to blame it on crypto, but it's really a missing cost basis issue. So, that's the big thing that we're here to point out today, is that form is going to be missing that, but who's going to fill that in? Well, you're responsible for it. Are you an accountant? Is this a background you have? Are you good at using all the crypto tax softwares that say they're DIY, but they're really not? That's really where we come into play, and we help reconcile your crypto trades, and then we can calculate that cost basis accurately for you, so you're saving on your taxes.
So long story short, if you bought XRP at 50 cents and you sold that at $1, if you don't have this special cost basis in there, you're getting taxed from the whole thing, the whole dollar, instead of the 50 cents, right? Because you only made 50 cents per token that you sold there. And so that is why having this cost basis in there is extremely important. So, if you trade enough and you don't have this done properly, you could be talking about thousands, tens of thousands, hundreds of thousands of dollars if you don't get this correct.
100% Sensei. You said it better. And it's really like in your situation, you're just saying that you're basically getting taxed twice. You're getting taxed on gains, you're getting taxed on the cost basis. You're not supposed to pay tax on cost basis. And people are going to be double taxed in a lot of instances.
Man, for someone who's been trading XRP for years, but has really never done the tax side correctly, what's the first thing that they should fix before tax season? Is that reaching out and setting up an appointment with you guys? What is like the first thing these people should be doing?
Yeah. So, one of those things, certainly we're glad to help. There are a few crypto tax services like ourselves popping up around. We're always here to help and, get that, in particular, the cost basis figured out. We're specialists in digital asset reconciliation. So that's going through and, tying all of your accounts back together, making sure that you're not overpaying, making sure that that wallet issue I was talking about at the beginning of the show doesn't happen to you, which is so common. And then really looking at your 1099 DA and being able to put the proper, field cost basis in that field for you is really going to help out and save quite a bit. There's also opportunities to look at, once you're reconciled, to look at tax loss harvesting, for instance. going through. We're in a kind of a down market right now, but people don't realize that, the wealthy people don't care whether the market's going up or down. Everyone understands when market goes up. Not a lot of people understand it's time to tax loss harvest when the market goes down. And that simply means, it's as simple as, trading out to a stable coin, buying something else, or buying back, your position, but you're allowed to take a loss. So, that's a good opportunity for a lot of people right now to take those losses against future gains on their taxes. So there's a lot of different things that we would point out to you through the reconciliation process.
And I love that. That's a lot of value. I wanted to say to the community that's listening live here, I will be pulling questions from the audience here. So if you guys have a tax question, I'm gonna use those tax questions. Okay. So obviously, if you have a tax question, please don't put anything kind of nefarious in the comments so I can actually bring it up on screen. I know that people get frustrated when maybe they feel that the government is overstepping with taxes. I totally get it. But I need to be able to have a friendly conversation here, and I can't have too much craziness in the comments. So here, let me get this one from Husky Tom. Do we get taxed on staking rewards? I guess that's a very simple thing that a lot of people do. How does that work?
So I want to bring in, Garrett real quick too. He's sitting here.
There he is.
He's our head, CPA here and head of tax. Garrett has an amazing background, by the way. Former Ernst & Young Big Four. If you guys don't know what the Big Four is, it's some of the largest accounting firms in the world. And there's, a total of 4 of them, Ernst & Young being one of them. Background in taxation. He also has a long-standing, did some family office as well for several years. So, that's working for a billionaire here in Southern California. And, this guy knows how to write off everything from your car lease to a private jet and everything in between. So
Garrett's the guy.
Garrett's a lot. Yeah, there's a lot of muscle here.
Yeah, oddly difficult. So yeah, staking rewards are ordinary income. They go on Schedule 1 of your tax return. As soon and there's certain instances where even if they're not vested, they still need to get picked up on Schedule 1 before you could even technically withdraw them.
Can you make that a little bit easier to understand? Like, not everyone speaks like this.
Yeah, sorry. Yeah, my bad.
No, you're good. You're good. Let's just help people understand that maybe on a little bit more of a basic term, if that's okay with you.
Yeah. So yes, it is taxable when they're given to you, and it's picked up on your tax return next to all your other income items as ordinary income versus capital gains or losses which you'd have from selling or exchanging crypto.
Yeah, and so it's the worst kind of taxable, to be fair. So ordinary income is what you're getting hit with your W-2. Especially if you're guys like me, we're out in California, it hurts even more. But a lot of crypto is taxed as property. Like with long-term capital gains and things of that nature when you're buying it, at spot and things of that nature. So when you're receiving it in that manner as income, you're getting highly taxed.
And then once you go to dispose of that crypto or convert it into another crypto or fiat, that's when you have capital gains or losses.
Okay. That's really helpful to understand. Please, Nick, you have something?
If it's given to you at $1, once it's given to you, you have to pay $1 of ordinary income. That becomes your cost basis in the asset. Then when you go to sell it, let's say it's worth $2 when you sell it, you have $1 of capital gains.
That makes sense.
Right.
Nick, did you have anything to add there?
No, just pointing out, highlighting what Garrett's saying. There's 2 taxable events there if you're paying close attention. So, it's kind of a double whammy. So the taxes are all around us, and there's a lot of bear traps out there, as you see. So being able to accurately report those are important, but there's also things that you can be doing to mitigate your taxes as well.
All right.
Just to address this one question they just asked on the chat, when they are earned, they're taxable. It has nothing to do with your withdrawal. Yeah.
Is it this question you were referring to? Okay.
Yeah. I saw me getting called out, so I had to. Yeah.
You're good. He said, please be specific about the rewards. When they are earned, are they taxable only withdrawal? So you were answering that. Are we good here? Can we move on?
And then the short-term or long-term is dependent on your holding period after they're earned. So if you hold them for a year after they're earned, long-term, if you sell them before then, short-term.
Well, see, look, now you're educating people because he's like, oh, crap. There it is. there it is, man.
Nothing fun about this stuff. I got to tell you guys. Yeah.
No, but I mean, you're still here with a smile. So maybe you are helping people. We talked about the 1099 DA form. You know, that seems like it's a new thing, or people maybe didn't know about it. Now they're finding out about it. Are there any other types of changes this year that people need to be made aware of?
Yeah, there's another one I would throw out there for you all. So there's different cost-based models that you get taxed at. So if, your early days XRP, I had XRP back in, 2016, right when it was the third offer on Coinbase, for instance. So I picked up a, pretty good amount, and I still hold a bunch of it. So the good news is, but when I get taxed, I've also bought some at the higher levels, right? Yeah. So when you're going to pick a cost basis model, you want to make sure that, typically it's better to, if you're selling, you want to sell the last one you bought at the highest amount, so if you bought it at $2 and sold at $2.50, you want to be paying, on 50 cents, not the ones I picked up at like sub 10 cents, where I have to pay on the, whole, $1.40 or $2.40. You want to pay on that spread. So that, that's the first in, first out model is when you're paying the most. That's when you acquired typically at a longer period, back when it was cheap, and then all of a sudden it went up, and then you're paying that big spread in tax. It's the last thing you want. So you typically want a Spec ID, which pushes you into a FIFO kind of model, where you're selling the last one that you bought at a higher price and getting those out first. So that delta is typically less.
So yeah, how does that work? Like, do you guys go back in time and track, like, specifically when you, like, how do you do that, right? Because when you buy, like, I bought 10,000 XRP 2 years ago, and I bought 10,000 XRP, 4 years ago, and then I bought 10,000 XRP this year, right? So you can kind of just.
So yeah, to your point, we hop in our time machine and, we go back, but, really, softwares help us out. And we identify these lots. There's a lot of good crypto tax softwares out there. We prefer Coinly here at Count on Cheap. But with that said, there's a lot of opportunities to go back in and you can see those lots. It basically aggregates all of your trades, from way back when. And then you can use something typically like Spec ID for the 2025 tax season to choose a model that works best for you. Typically, I'm saying that FIFO works well because that's kind of what you're going in and cherry picking the lot that makes the most sense with the least amount of tax liability. So that's usually where you want to go with it. However, everything changes in 2026, and now they're going to move to the first in, first out model, and that's the one that typically yields the most tax liability, which is not good in most cases. So the problem, of course, the government and the IRS would want that model. They made that the default now. That's not good for people. However, if you do tell your broker before every single trade what cost-based model you want to be trading on, you can choose the cost-based model of your liking. That's not easy to do. That's not convenient. No one that's a trader is really ever going to do that. I think that, kind of might set up the wealthy elites that might, call the broker still and make trades like that. I mean, we're trading online on Robinhood and everything else, and buying on, the exchange. So with that said, that's not going to help a lot of people. However, there is a blanket statement that they have where you can, create it. You can declare for the year that you're using, a certain method like FIFO, Spec ID. But you have to do it early in the year, and you have to contact your broker, and you have to have it on file with them so they know that all your trades for the year are going to be put under that classification. So, we're currently working that out here and helping our clients get onto that, and reaching out to the relationships we have with Coinbase, Kraken, the major exchanges, and Gemini, and helping them establish those cost-based models early in the year so they don't get taxed heavily at the end.
All right,
there's also panic over the 1099.
Go ahead, Garrett.
I said it seems like they don't even have an actual strategy or protocol set up because they're still panicking over the 1099 DA and playing catch up. So we're just trying to stay on top of them and hopefully, get the best outcome for our clients.
Not like it. I mean, it matters to some people. Like when were these new tax laws on crypto? Was this something that was like from years ago that just now happened, or was this something thought up, in the last 6 months or 8 months, and now it's been pushed forward? Do we have any understanding of that?
Yeah, a lot of this, was kind of coming about in 2024, and and then kind of got pushed into 2025, and some of these things even got pushed out to 2026. So they've been going through and just slowly but surely going through and tightening the bolts. But yes, some of the outliers are still there that we're seeing. We see clients that are still, selling and buying back in less than a 30-day window. for instance, and if it was a security, the SEC would have that under a wash sale rule. Currently, that's not existing right now in crypto. I think that's subject to change. I know that there's some people in Congress are looking to get that to change and see that as a loophole. So being able to take quick losses and then buy back in is probably that. I think that's going to close sooner or later. But that, it's interesting that one's still available for people to use for the meantime. Notice the timestamp on this video, because I feel like this can change any day. And then, I would say, that's still out there. And then, they are starting to kind of tightening the noose a little bit. I see, issues with, the 1099 DA really does change the game. That really means that they're looking at us in a meaningful way.
All right. There's somebody already asking about, do you guys offer a free consultation? Somebody has some more personal questions for their situation that they probably don't want to put in chat here. What can somebody do if they know that they need your help here?
100%. So there's two ways to go about it. We definitely have a free consultation, especially anybody that comes from Crypto Sensei. You guys can talk to us for free. There's kind of levels to that. Our team is, well-versed in talking about crypto and blockchain accounting and any problems you may have with, your trading activity and how many years ago it goes back. Armand is a great person to speak with on our team. And there's a few other people that we do a free consultation with that actually do the work. And then, if you want to really get into the weeds with your particular situation, I really highly, think you should talk to Matt. For $159, he can really dive deep into your account. He can really look at things, across multiple chains and everything else, exchanges, and really make sense of it for you. So highly recommend if you really want to take a deep dive on your portfolio, and it's very unique, just as unique as your fingerprint, I would put it in with Matt Leong.
So guys, if you have less complicated questions and it's just kind of, how do I do this? How do I do that? You probably would look at the free consult. If you have a more complicated situation where you think this is going to take a lot of time and you need real, maybe like an hour-long appointment or whatever. I don't want to put a time frame on it. I do apologize about that, but Matt's probably the way that you want to go. These guys can get you set up and where you need to establish and give you. So what happens? You guys you go to this consultation, you answer some questions, and then you guys kind of say, hey, this is what we would need to do for you. This is kind of how much it would cost in order to do all of these things for you. How does that work? Because I'm sure people are wondering.
Of course. So, we go through our consultation. We tell you really about Count on Sheep, where we came from, what we're doing, what we deliver, your 8949, your Schedule D, your Schedule 1. These are things that your CPA needs to file correctly for you. So that's a big thing. Garrett also is now running a full filing service as well with our COS Elite division. So you can get all the way filed all the way through. So, if you want to keep your CPA, that's fine. If you need someone to file for you, you got guys like Garrett on the team that can help their CPAs. That's kind of what you're getting on that, kind of free consultation is really understanding kind of what we're delivering. But it's really important that the audience knows that it's very important that those forms get, filled out correctly. If you have just a CPA just filing your 1099 DA for you, you're going to lose big. So you really need to have the 8949, which basically reconciles everything for you, saves you quite a bit. And then, you'll have your Schedule D information with your gains and losses. And then, of course, your Schedule 1 if you had any crypto payments.
Now, to make it easier for you guys, so you don't have to go Google search and maybe click on the wrong thing, there's a link in the description of the YouTube video that if you want to set up an appointment, you click the link. That also helps support the channel. So if you want to do that, greatly appreciate it. And if you want to tell them Crypto Sensei sent you, that'd be really cool too. But if you want to kind of keep it more private, you don't want to say that, it's all good. We just want to make sure that you are getting the help and you don't get a weird letter from the IRS, and that's uncomfortable. We don't want to see you in that position. Let's move on here. There was another great question here from the audience, and Big Kahuna, big fan of the channel. So he says he plans on gifting XRP to his kids after price appreciation. What constitutes a tax event once they sell, and does the short-term and long-term designation date change to the gifted date?
Sure. Yeah. So the answer is when you gift to your children, they get carryover cost basis and they get carryover holding period. So you'd keep the holding period. When I see after price appreciation, my heart stops a little bit. Why not before price appreciation? So the idea is over a lifetime, you have a lifetime exemption for gifting, and it changes every year, but it's about 13.5 million per person right now. After that amount, and that's the amount you can gift while you're alive, and also with your estate once you pass away. And so after that amount, the IRS likes to tax you with this 40% estate tax, which we try really hard to make it so no one ever pays ever. So the best thing to do is to gift it now before price appreciation. When the value is low, then it's not going to ding your lifetime exemption. Again, a lot of us go 13.5 million. I'm never going to hit that anyways, but you never know what life is. You may as well do it when the value is less. So if you gift it right now, you file a 706 gift tax return. It's like a two-pager. It's pretty easy. And just say, my lifetime exemption was 13.5 million. I gifted $100,000 to my kid. Now it's 13.4 million. No taxes due when you file. It's just an informational form. And that's all you got to do.
Beautiful, man. I appreciate you answering that. And then also one more time before we move on here to some other stuff. People talk about trust. How does forming a trust or maybe an LLC affect taxation? I know some people say that you can get around certain things by doing certain things. Is that accurate, true?
Yeah, I mean, I generally think it's not true, and it's a lot of people trying to generate fees. LLCs are good if you want to hold your crypto anonymously. Wyoming LLCs. If you go look at Wyoming database searches, you can't find an individual's name that owns it, so you can keep it quiet and make sure no one knows you have it. And it's supposed to help with creditors seizing the assets, but I don't know, necessarily a huge believer in that too. It might be a little harder, but when creditors want to come after your assets, then come after your assets. For a trust, I mean, there's this deferred sales trust that essentially can make it so that you put in appreciated assets into that trust, exchange it for another asset. Let's say you want to get out of the crypto game, you want to get into the real estate game. You can exchange that crypto for a different asset without being taxed on the appreciation, and then take distribution. So benefit there, I still think it's kind of a specific person you set that up for. These asset protection trusts, I think, are a huge fee grab. I don't see the big benefit. You could set up an irrevocable. Again, if you're in the same spot as Big Kahuna mentioned earlier, you think you're going to get past that $13 million of lifetime exemption. So you want to go ahead and throw some of your assets out of your estate and into a trust. It leaves your pocket and goes into the trust. So you're gifting it at that time, and then you can designate what happens to those assets down the road. Problem is, irrevocable can't make it come back to you. So if you get on some hard times, those assets are restricted in how you could use them. Okay. So some options, I think overall it's over preached for the average investor.
Understood.
Not a lot of value there tax wise. I can speak for myself. I mean, I keep my crypto assets, in a Wyoming LLC, and then with Anchorage Digital. So, just speaking from that, it keeps it relatively safe, keeps it relatively private. But as far as the tax man, it all comes for you. So, nothing really you can do there to structure that, to get away from tax. But it does protect you in different ways. And I keep my real estate assets in LLCs. I keep my crypto in LLCs. I keep my businesses in LLCs. So it's not a bad thing to do to protect yourself. And from a taxation point, Garrett will tell you it's not really going to save you too much.
Understood. And then, guys, if you're just now joining us, we are going through one of the most important things that you probably need to understand is taxes and your crypto. We have Nick and Garrett here from Count on Sheep. So if you have questions, if you haven't listened to the first half an hour, you definitely want to go back and make sure that you understand all these things that we were talking about. Let's move on here. If an exchange shows the wrong cost basis for XRP or another crypto, or is missing some history, what can I realistically do to fix that? Can I override the file? Do I contact the exchange? Is that something that I just need to fix when I go to file all of this stuff and notate that the exchange has the information wrong and here's the right information? How does that work?
Yeah, I mean, some of the softwares will allow you to do some edits like that. I mean, a lot of them typically have that historical data for you. So, I mean, they usually like punching into CoinGecko or something like that with an API, and then be able to kind of get that back for you. But yeah, if you're some like on some obscure decks or something like that, and it's not providing that for you, there are ways to go find it. Once again, I mean, CoinGecko is one of the best that we know of, and some of the softwares will try and provide that information for you. But that's typically something that we would go hunt down for you on a third-party software that has that kind of historical data.
Crypto is a complicated space, and sometimes we buy something years ago, we forget it's in a wallet, and then we maybe misplace where the keys to get into that wallet, and essentially that money is dead, but yet we still have the cost of buying those assets years ago. What does somebody do when they're in that position? Is that now a write-off? Like, what does a person do in that situation?
Garrett?
Come on, Garrett.
I mean, it becomes complicated. A lot of times we can track down that transaction data to the extent you still have the asset, but the transaction data is not retrievable. There are times we have to put zero cost basis for that crypto. Okay. Never something we like to do, and we definitely try really hard to minimize doing that. I think you were talking on that end, right? Not when an asset becomes when an asset basically is scammed out of or zeroes out.
We could talk about that too, right? Because I think that's
becoming one of my favorite topics these days.
Yeah. Okay. Yeah. So if I buy something, let's say in 24, right, and I've been holding this asset, and all of a sudden, like all of these promises that the project made, they failed miserably. Now the project goes extinct. It's not worth anything. What do I do?
Okay. I mean, so for the IRS, you just have to prove it's not collectible and there's nothing to be received. And then you can take a capital loss write-off on that stand. Yeah. Which is different than if it's a scam. You can usually take an ordinary deduction by proving you were actually scammed, whether it's pig butchering or unauthorized transaction or any of those scams, which we're seeing a lot here, Count on Sheep.
Right.
We essentially document it, and as long as they had a for-profit motive and a few different things are aligned, we can basically get them a ordinary tax deduction that they can use to offset their their other income, whether that be wages or business, self-employment, anything else.
All right, that's fair enough. I just wanted to make sure that everyone understood that. I know that I've dealt with a few of those things in the past, and so I'm sure if I've dealt with it, the community's dealt with it too. So it's good to understand it. And when we do these interviews, I have a bunch of questions, and the community has a bunch of questions. But instead of me waiting to the end here, what do I need to ask you guys? Like, what is maybe the most important pieces of information or things that you guys need to tell us about taxes and crypto?
Yeah, I mean, the big ones, just the short list of them is kind of things we've been talking about, but just highlighting real quick, and just, not going into a bunch of examples, but the 1099 DA, we're going to just, continue to say it. This is a game changer. This means that, the IRS is looking at you. Some people are trying to spin it to me the other day that, it's like, oh, this is great. This means like we're mainstream. We have a seat at the table, on Wall Street, we're crypto. And now but really when you look at it, it's, we're under a magnifying glass. So there's no more, really like, oh, do they see it? Do they not? Oh, no, they're seeing everything, and everything's being reported by your exchange. So, I mean, the 1099 DA with the missing cost basis, gosh, if you filled in anything, you'd be saving money there, but you want to fill in the accurate number, because you could be audited and it could lead to a lot more hurt by just, trying to guess at it, or how your CPA guess at it, or, so you really want to be able to reconcile. Then I really want the audience to understand what digital asset reconciliation is. That's really, stitching together, multiple exchanges and wallets to make sure that, since they are decentralized and they don't have to speak to one another or pass cost basis to one another, we're the ones that go in and fill in that gap, and we stitch it all back together to get the accounting picture. That really helps a lot. And then, to your point, Sensei, is we had a person that lost a wallet, and we're going through and we have to, find wallet to wallet and start stitching this picture back together. We noticed that there was a missing wallet that they didn't give us up front. So we asked, where is this? The guy said, hold on. He ran into his garage. He opened a box, and he yelled Eureka, and he pulled out the phone apparently while we're on the line with him, and he started tapping into it, and he found 3 Bitcoin on there. So, and this isn't our first example of this. Like, we find missing, transactions for people all the time, and he's missing wallets, and they just forgot they had from years ago. So, that's what the digital asset reconciliation process can do sometimes for you. But more importantly, it creates, that kind of audit trail that you really need to prove that that's your crypto, and and to get taxed correctly and not overtaxed like it typically is. And then the last thing I'll say too, I really want people to understand the tax loss harvesting. Like, no one should be crying when the market goes down. You should understand what tax loss harvesting is. You should look at your, what's in the red. You should consider trading out of those positions if it makes sense for you. And then you can buy back those positions. You buy other positions, whatever you feel like doing. But, taking a loss on the blockchain is simply as simple as swapping it for a stable. And, then you can use those losses against future gains. So the tax game is played both ways. It's played in losses and gains. And if you can bank losses now for the gains that we know we'll have in the future, that's a good look.
No, I think that's very valuable to add that. Somebody did ask Ariana, one of our mods, hearing about the 1099 DA forms, the exchanges say that they're going to mail them to us. If the exchanges don't mail them to us, I mean, you've had these conversations with them. Is this something that we're going to be able to access on the platforms or get emailed to us? How are these supposed to arrive to us?
They are on the platforms. I mean, they're going to be required to be, just like if you had any brokerage, with securities, same thing. There'll be a tax section on the platform, and you'll click on it, and the 1099 DA, in theory, will be up there. I just checked my Coinbase this morning, hoping I would see mine, and it's still not. They're not. All these platforms are saying they're going to have it by mid-February, but I've also just heard kind of panic in the streets from these guys. So we'll see. I've heard of some. We've seen some clients have gotten them. Some have come through, but I don't know how they're picking. Maybe they're going alphabetically, and I'm getting screwed because I'm a tailor. I'm not sure. How they're doing it.
All right, that's fair enough. Can you use losses with XRP and other assets to offset other investments like stocks or ETFs or anything else?
Sure. You produce capital gains or losses, right? With crypto, crypto losses can offset any other capital losses, such as selling securities. But they can't offset ordinary income. Like your business income or your W-2 wages, 1099 income, those sort of things. And sorry, just before someone gets me in the comments, you can offset $3,000 per year, and then the capital loss carries forward indefinitely. So if you make $60,000 of capital losses because you did some tax loss harvesting and followed Nick's advice, which I recommend as well, but you don't have any capital gains this year, you can use $3,000 to offset your ordinary income, and then the rest carries over to your next taxable years until you can actually use those losses.
Oh, I think that's very valuable for people to understand. Are there common mistakes people make when trying to do tax loss harvesting or tax loss harvesting? With their XRP, does end up killing the benefit if you make a mistake? How do people learn to do that? Is that something they go to you and you guys say, this is what you probably should do next year? I mean, you can't really do it anymore, right? Because you missed the opportunity towards the end of 25, correct?
Correct.
Well, no, I mean, you can still do it for 2026. You can't benefit. I mean, we just had some big drops. I've told a few clients already. A client 2 days ago reached out to me about selling 70,000 of XRP because it dropped, dollar. So yeah, you could definitely do it now. The benefit you would receive in 2026. So no one really knows what's going to happen this year, but like I said, you can carry it forward, and the only cost to you are the transaction fees. So it's where can you get the lowest transaction fees to make it most worth it. And in this case, this guy was paying a 0.10%, so pretty good.
That is pretty good. Nick, did you have something you want to share?
Yeah, I was just going to add that the blockchain records everything. So, I mean, they don't realize how easy it is. It's, it's almost like a party trick. You pull out your phone and you see what's in the red, and you swap it to, a stable, and then you swap, you can keep it there for a while, wait out the market. You could buy back in, you could buy another coin that you had your eye on. So, there's a lot of things you can do. It's all up to you. But, as the minute you, swap to a stable, that's recording that loss. That's disposing of it.
I know a lot of people will be listening to this, and maybe some people are trying to do crypto taxes themselves. Opposed to someone trying to do that themselves and missing something or going through your firm. I mean, what do you think the differences could be on, maybe a person making just a few mistakes on their taxes when it comes to crypto, or having a professional team like yours going in there and making sure that every, T is crossed, every I is dotted? Like, could that be something that's in like the thousands of dollars, hundreds of thousands of dollars? I mean, what kind of mistakes are people making here? And like, are those easily solvable by, using your service?
Right. I would say, we've seen savings all across the board. I mean, we've seen savings, upwards of $1 million to, hundreds of thousands of dollars to, $10,000 to a few $1,000s. And we've also, just had people that just, weren't recording it accurately and, owed a little bit more than they did. So, I mean, but, at least they got accurate, they weren't going to be audited. They got the right numbers in. So, but typically, there is a savings mechanism here, but that's not what we really plant our flag in. Our, what we're here to do is get accurate, auditable, backstops for you in place. So if someone comes knocking, they know it was done professionally. I would say, sure, do it yourself. If you have a background in cost-based modeling, if you understand reconciliation and, and how to tag all these different, trades, if you understand tax loss harvesting, if you understand, a lot of these, different blockchain elements, as with the accounting piece, you can go for it. I think a lot of these tax softwares are they're advertised to you as DIY, and and CPAs will just tell you, oh yeah, just go throw it in there and see what happens. But there's typically a lot of gaps in that data. And if you don't load everything up and can't find everything, it's not going to calculate out correctly. Also, you are on the hook for using those calculators. That's literally what they say. I was wondering how, these crypto tax softwares never get sued for, creating, the wrong information. And they basically just put it all on you. So if you feel, that confident in that, yes, and you have a very simple portfolio, by all means, that they can work out. But if you're moving your crypto around and you have, multiple exchanges and, you have tens of thousands of dollars or more, it's great to use a service just to get it done correctly. Then you have someone that stands behind it. Then if the CPA has any questions, you come ask us. It becomes, a lot more defensible that way.
Understood. And then, is that probably the best option for somebody right now if they're trying to figure out how much taxes that they're looking at, or just a rough estimate before they go in and edit anything? Like a Coinly is probably one of the things that they should maybe do first, connect that, and then reach out to you guys. Is that maybe like the process?
Well, actually, funny enough, we're good friends with the people over at Coinly. That's who we prefer. Getting started with us is as simple as having a call. We quickly figure out your situation. We can give you a quote on the hours that we need. And then from there, it's a quick DocuSign, a quick down payment with Stripe. And then we go right into giving you, a licensed copy of Coinly that you use. And it's great that I bring them up as well, because that's how you protect yourself as well. It's your Coinly. We have the license that we can give to you, but you're the one that logs in, creates the password, has all that information. You're in control of it. And then we're invited in, and then we're able to go ahead and make the reconciliations that we need with our professionals. You should also know that, you should never give your keys. And this isn't one of those things where anyone would ask for them, nor would you ever need keys to do your crypto tax reporting. Simply, these crypto tax softwares simply mirror your account. So they use APIs that aren't able to withdraw any of your crypto. They simply mirror what's in there so we can see what's going on, and then it puts it on the screen for us. But there's no access to any of your crypto in any of these softwares. So just to make that clear. So it's very secure, and you're in control the entire time. So it's your passwords, your Coinly account.
That's really good. And then Big Kahuna did say, Nick, Garrett, Sensei, thank you so much for this information. More like this, please. So I think people are getting a lot of value, and I really appreciate you answering some of the questions. I did have a few other things that I wanted to touch on, because I know a lot of people have like LLCs and small businesses. For people that maybe Like for me, for instance, like I have editors and all of these people, and I sometimes pay them in crypto. Are there any rules? I mean, for LLC and small businesses that pays contractors or team members in crypto or XRP, what does the IRS actually see that as? And what are the key tax obligations, that I can't afford to miss?
Yeah, so it'd be you as the business when you pay a contractor, to the extent the asset had appreciated or depreciated, that's a capital gain or loss at the time you make the payment. And then the actual fair value of the payment is the expense itself. So if you bought XRP for 5,000, you pay the contractor for 10,000, you have a $5,000 capital gain at that time, but then you have a $10,000 ordinary expense as part of your business.
Okay. All right. That's fair enough. What kind of records does an LLC need to keep when it's paying out crypto? Is it timestamps, wallet addresses, screenshots? What do I need to be keeping track of?
Sounds a little overkill, but I would say generally
everything.
I'd say generally, good books, quick books are always nice. And then the main thing you need is some sort of record. When you're making the payment, you need to have some sort of record to say what the fair value was at that time, and make sure you're recording your books correctly to pick up the actual capital gain or loss as well as the ordinary expense, to the extent you're making payments with crypto.
All right. Let me do this. I want to ask the community if they have any other, questions to go over and talk about. I'm kind of getting to the end of the questions that I have. So I wanted to give everyone one more shot if there's anything. When we're talking about kind of tools, checklists, and just things that people can be doing every day to make sure that when we, have to pay our taxes, like, is there something that people should be using every day when they're buying and selling or trading crypto to keep track of all these things? Is that the Coinleys of the world? Is there another thing that you guys would recommend that your clients use on a daily basis to keep track of these things?
As far as keeping track of them on a daily basis, the exchanges typically do pretty well with that kind of data. The cool thing about Coinly as well is it has your APIs that will connect you to your exchanges and to your wallets. So it's auto updating typically. Sometimes they get knocked off. You have to reestablish them real quick. If it goes a certain amount of months, as like a safety protocol. But once again, crypto's never at risk on one of these. It's only a mirror only situation on their API. So with that said, once you're in Coinly and we get you all set up, it will start, sucking in that information, basically automatically. So every time you load in and, load up the software. So that's the nice part about using these softwares. It's a great aggregator. I think, it's good to have the aggregator with the service to get it done correctly, but they are great about pulling all of your, XRP and any other coins into one space so you can see them all and then updating.
Fair enough. Looking ahead over the next few years, what do you think will surprise crypto investors the most on how crypto taxes are enforced?
I think it's interesting that come 2026, the 1099 DA is going to be required to include some sort of cost basis is what legislators have required. I have no idea what that's going to be. I mean, there's just no way they would actually know what it is. So it'll be interesting to see, what they do, or if people follow it, or, all the time the government creates these laws and regulations and has no idea how to actually implement them. And that's a peak example of what kind of cost basis is Coinbase going to get when you have an asset transferred in and out and exchange and all over the place. They're not going to have any of that data, so they're just going to go based on what you tell them it is, or it'll be curious to see what happens there in the next year.
100%. I think I couldn't back Garrett up any more than that. I mean, he said it the best. The fact is we are living in a decentralized world, in crypto, and that's not how cost basis is passed. Cost basis works really good in traditional finance, where it's, centralized and it's passed, to one place to another, and everything's handed over nicely. And that tends to work well, for accounting. However, that's not what we have. We have two decentralized sovereign exchanges, for instance, that do not have to speak to one another and are not going to speak to one another and are not going to pass the cost basis to one another. So, you know, I don't know how we're going to get accurate, you know, reporting done on this, you know, until this concedes. And I feel like, you know, if the decentralized piece goes away, then we're kind of going back into a centralized world, you know. So it really goes against our ethos, and you know, so that's why Count on Sheep exists, is to be able to go and bridge that cost basis from exchange to exchange, wallet to wallet for you, since it's not being done for you.
Man, it feels like there's a lot that we don't know, that we are learning every single day, and things are changing rapidly, it feels like. And you know, having somebody and a team there to get you through this maze is probably something that'll benefit a lot of people listening to this. Nick, let me just turn it over to you. I don't have any more questions. Is there anything that we haven't touched that is important that we need to go over? And then if once we do that, any kind of closing things that you or Garrett want to say to the community, now's the time.
Absolutely. So I, you know, definitely want to stress the April 15th deadline. You know, we're glad to work with anyone. We still have some seats available, and we have some still kind of preseason seats, as we call them, where we're, you know, charging less hourly. So I want to point to those. That's going to close up on February 20th. So you'll get at least, you know, billable hour. You know, you come and say you're from the Crypto Sensei, you get that discount, and now you're working on a preseason rate. So we're already in the full swing of the tax season, as you would expect. So yeah, then the price tends to go up after February 20th relatively significantly, because we have a lot of people that want to do their taxes last minute. And then, but that to get around that, you know, you also have an option to go on extension. So Garrett can help you out with an extension, and then that gives you more time to file. You do still have to pay some money April 15th and an estimated payment of what you would owe, but then you have the time to go through in the summer, pay less to have the service done, and then you'll be ready to file come October 15th. So we want to point that out as well. And you know, it's becoming a busy season quick, and the 1099 DA is really pushing a lot of business our way.
Beautiful. And then we did have a few more questions here. What's the difference for time frame from short-term and long-term gains? Is that a year?
It's under year over year. Yeah, they make it pretty simple.
Love that. And then if U.S.-based crypto tax-free legislation,
No.
yeah. You know,
if the IRS doesn't want money, come on.
Big Kahuna, you're the best. Yeah, you know, this is what I'm talking about. Big Kahuna for president, please.
I see people online talking about, you know, they're gonna abolish the IRS and we're not gonna have taxes, and like, you know, I don't know, are people just kind of gullible and they're like, hey, this is something that's actually going to happen? Like, I don't know, man. It's kind of crazy, the world we're living in right now.
Yeah, I mean, governments only allow for things because they tax them.
Yeah.
You know? And that's where we're at. I mean, that's why I got into this business. And, you know, but the thing is, we got in this business to help a lot of people out. And there are a lot of ways to reduce your taxable liability in crypto. I mean, a lot more than a lot of other spaces. So, you know, it's really, you know, understanding what those are and being able to use those. And, you know, some of them might not be available for too much longer. So I think it's never going to get as good as it is right now, especially for the 2025 tax season that's upon us. And, you know, there's a lot of things that you can still use to mitigate, you know, some big tax payments.
All right, guys, listen, there's a link down in the description. You should you should probably get some help and advice on this. There's things changing. You know, that's my recommendation to you. If you get some of this stuff wrong, it will eventually always come back and haunt you. So, you know, book a free consultation. If you have a more complicated situation, you can meet with Matt Leong here for $159 to get you started. Count on Sheep. Nick, Garrett, thank you so much. Anything you want to say in closing, Nick? I'll turn it over to you.
Hey, Sensei, we just appreciate you like always. You know, thank you for having us on the show. We're here for all you guys. It is a free consultation. Come chat with us. We're glad to answer any questions, and we're really glad to help you out. And there's a lot of ways for you guys all to save this season, and we really want to, you know, push that and, you know, help you guys with that 1099 DA, because that $0 cost basis is going to make everyone overpay. So, you know, please, if you get the 1099 DA, we'd love to speak with you, and we really appreciate all the support from the Sensei Show, and thank you.
Man, I love it. Garrett, thank you so much for answering all those questions along with Nick. You guys are doing a good service here, and I'm sure a lot of people are going to find benefit. And we just really appreciate your time to answer our questions. And if if you're just kind of jumping in at the last minute here, go back to the beginning, watch this whole thing. It is going to impact you. If you're trading crypto, you need to know all of this information. Guys, it's an honor. And, I'm sure I'll be talking and seeing you guys very soon. All right.
Awesome. Appreciate
That's
it.
great.
Thank you.
All right, guys. Thank you to the audience. I love you guys. I will see you on Friday with a full chat. Aloha. Prepare your taxes. See ya. Bye.